Hi, in today's class, we will learn how to work out the step 1 in a fund flow statement problem, which is the schedule of changes in working capital. There are 4 guidelines that you will have to follow while preparing this step. The first guideline is that all the current items are considered over here. The second guideline, all current assets and working capital have a direct relationship. The third guideline, all current liabilities and working capital have an inverse relationship. And the last guideline, provision for tax is considered as a non-current item and hence it will not appear in this step. So let's move forward and work out a sum where we finish the schedule of changes in working capital by following these guidelines. When you follow these guidelines, you will ensure that your answer is right and free of errors. So I have taken one problem where I've only extracted the current items out of it so that we can work out just the step 1 at ease. Here is the problem where you have your current liabilities mentioned and the current assets mentioned over here. So we will be preparing the schedule of changes in working capital looking at this sum. Let's look at the format of the schedule of changes in working capital. Particulars, the 2 years for which you will be preparing the schedule, and 2 more columns to show the changes a current item has on the working capital. So we first start with the current assets. In the question, under current assets, you have around 6 points. But of these 6 points, only 3 of them have values against it, which is inventory, debtors, and cash. So we're going to write down these items one below the other in our schedule of changes. Starting with inventories. Now you should ensure that you copy the right value into your schedule because in the statement or in the question, they give you the latest year first and then they give you the previous year. But when we have to prepare the schedule of changes, we'll have to write it in chronological order or ascending order. So the previous year comes first and then the current year. Therefore, the inventory value that we will be transferring will be 4 lakh and then 2 lakh 50,000. Next, we have debtors. Copy down the value of debtors. The values 50,000 and 40,000. Next, after debtors, we have cash value. The amounts are 60,000 and 35,000. Next, we will be moving on to the current liabilities. Under the current liabilities, we have creditors which have a value against it and short-term provisions. Over here, short-term provisions stands for provision for tax. Now, when we look at the 4th guideline of the schedule of changes in working capital, we need to remember that provision for tax is not considered as a current item. The main reason being this involves appropriation of profits and hence we always treat it as a non-current item. And since this is a non-current item, it will not appear in the schedule of changes in working capital. So we will only be considering the value of creditors in this problem. So under current liabilities, mention creditors and copy down the values. 3 lakh and 1,40,000. So after having looked at the first guideline of schedule of changes in working capital, we've considered all the current items in this step. The next guideline is the relationship between current assets and working capital. Here, current assets and working capital have a direct relationship. In simple words, for example, you have stock. When stock increases, your current assets increase. Now, whenever there is an increase in stock, you have applied funds somewhere in order to increase the stock. And therefore, it is an application of funds. And when stock increases, automatically your working capital will also increase. Over here, stock or inventories shows a decrease. From 4 lakh, it has decreased to 2 lakh 50,000. That is a decrease of 1 lakh 50,000. So this difference in amount will be mentioned under the decrease column. Next, moving on to debtors. Debtors have also shown a decrease of 10,000, and therefore this difference will be shown in the decrease column of working capital. Likewise, cash has also shown a decrease of 25,000. Hence, the decrease in all these assets does lead to a decrease in the working capital as well. You can find out the total of your current assets. Moving on to the current liabilities. Here we look at the third guideline, the relationship between the current liabilities and working capital. Current liabilities and working capital have an inverse relationship. That means if current assets increase, working capital will decrease and vice versa. So here when we notice creditors value, from 3 lakh, it shows a decrease to 1 lakh 40,000. So the difference in decrease, that is to the extent of 1 lakh 60,000, will lead to an increase in working capital. Therefore, it will be mentioned under the increase in working capital column, 1 lakh 60,000. So with both our current assets and current liabilities considered, we can then find out the total current assets and total current liabilities, which will help us in solving our problem further. Now we calculate the working capital. Over here, working capital is calculated by current assets minus current liabilities. So you have 5,10,000 minus the total of current liabilities. You get a working capital of 2,10,000 in the first year. Likewise, calculate the working capital in the second year. 3,25,000 minus 1,40,000. So therefore, you notice a working capital from the first year increasing when it moves on to the next year. Therefore, you can conclude that there has been an increase in working capital. So the difference in increase in working capital must be mentioned. 1,85,000 minus 2,10,000. So this increase in working capital will be considered in the last step. This is how you prepare the schedule of changes in working capital. So it is very imperative that you remember the 4 guidelines that I have shown you, which will help you in finishing this step without any errors. Thank you.